Sorry. Okay, everyone can hear me. Microphone was not working very well. Jesus, you should have sound now. It was just the microphone wasn't on. I didn't really check it. So anyway, I'm gonna just do that, get something set up whilst I'm just trying to get my camera and all that working. I will be back. Give me a second. Why is that not? You can tell it's first day back after the cuddle, can't you? Why is my camera not coming on that screen? Doesn't matter. Okay, anyway, apologies for all of that. Let's just get cracking with where we are. So we had the cuddle this weekend. We had the AI crypto, whatever it was, conference. But yeah, really good to see everyone, speak to everyone there. I really enjoyed myself. And although it was subnet heavy, even I managed to enjoy myself. So hopefully those of you who attended did. I don't have dates and times for when the videos are coming out, but I know they're working on them straight away. So they will just be released as and when they are available. Usually I sort of just, don't really mention what I talked about and then just like wait for the video to drop. But if I'm being perfectly honest, firstly, Simon and I really need to communicate because he spoke first and then I sort of went on, and had I gone and spoken about what I wanted to talk about, kind of would have repeated ourselves. So I actually took sort of the first half of my presentation to talk about the market, particularly given, we had a big fallout on Friday down to 80,000 just a bit. So I wanted to talk about market sentiment, and I'm actually going to continue that conversation tonight because we don't know when sentiment may or may not change. So I want to have a bit of a discussion about where sentiment currently is, one off the back of speaking to people on Friday night after the collapse on Saturday, people's thoughts generally on the market and a lot of questions that I'd been asked about it. And I thought I might as well relay that again today. I'm going to be honest. I'm going to give you the good and the bad. Okay. I'm not really going to make any overarching prediction of where we are, but I'm going to have a look at both sides of the table. And we can kind of just make a informed decision, however you want to see it. I'm not ready to give in. And I do consider, that sentiment is overly bearish at the moment and perhaps doesn't seem as justified as it should. But I'm going to go into some of the reasons as why that, could be a good thing, but also why we just need to be a little bit cautious. And I'm, as I say, most people know me as perhaps not being the biggest risk taker in the group, but please listen to what I have to say. And if you've listened to it and then you want to ignore it, absolutely fine. At least you've listened to the other side of whichever way you feel it is. And then we can just go from there. There's a load of questions that were asked at me at the cuddle, which I'm going to try and go through as well. Quite a few questions coming through the chat, so I'll try and go through. So it might be a bit all over the place. I'll try and get through things as quickly as I can without any further ado. Let's just jump straight in. I don't even have my things up on the chart, so that's fine. Sentiment, don't talk about top signals, and then we're going to go into Discord and have a look at the questions there. But they're having a look at the 3-day time frame at the moment. I have no idea where my face cam has gone, honestly. I mean, it's not that important. There it is. Okay, there we go. Right. Bitcoin 3-day time frame. So this is sort of the cascading waterfall effect that we've actually had over the last couple of weeks, kind of culminating on Friday with this big drop down to 80,000. Started, and it pulled itself back up over the weekend, got to about 86,000. You can kind of see these green lines, they were yellow a second ago, were lines that I kind of drew last week of areas that we need to have a look at from interest point of view. And you can kind of see that the battleground right now is that 87,000 level. We didn't quite fall all the way to 78, but we've come basically all the way back down to the April tariff lows, retested those. We've managed to close above them, at least giving us some hope of the bull run continuing. And we're starting to make that move back up. To be fair, we've gone from 80,000 to 87, 88,000 sometimes today. So we have made a relatively decent recovery over the weekend. But the point is that we've got to sustain that drive going forward. And right now, just on the 3-day time frame with no other real indicators there, all we've got to go on is the 86,000 level. And the fact that we've actually kind of closed above that. We keep building support, that's fine, but we've still got over a day left on this candle here. So a bit of work, unfortunately, needed to be done there with price action. In terms of dominance, we've lost that now. We've broken through. This is, you know, it could turn around. I absolutely accept that. But, you know, for me, we've already fallen halfway down here. I think maybe even heading down towards 57,000, which is about 57%, which is about another percent drop. So maybe we can start to see some movement. And it's a bit of a weird one because what we've really been seeing is Bitcoin falling harder than altcoins, or Ethereum at least. And so it's not that altcoins have made a better move. They've just managed to recover their dollar value a little bit better. But I do think that that is probably heading back down. We go into total 2, and this is not what we want to see. So we've come back down, and then this 1.26 trillion level we've talked about for months. You know, we've lost it. That's fair enough. Sorry, I'm playing around with some tweezers. Let me move those. We've then tried to recover back up to over the last couple of days. We've hit it, and then we've come crashing back down. Still a day to go. Who knows where it's going to be? But looking very similar to the Bitcoin chart, then when we have a look with vectors and EMAs and Fibonacci's and whatever else we want to have a look at, again, and quite a bit of work still to do. And then we've got our favorite here, BitTensor. And I mean, we came back down to this yellow line. And it has been a good yellow line for us. It really has. This sort of support and resistance line. You can move it around a little bit. We've always sort of said that this can kind of be redone down to there, but I've always left it where it was. And at the moment, we have come clean into it. We've closed above it, and we're just sort of having that battle there. I took a sidestep on Friday, and it ended up getting back in on Friday with BitTensor. Did the same with Bitcoin as well. But I'm not fully back in. For those of you that are cuddle and aware, I got out at 303. I set some buys. It basically got filled to about 268, but I had some right down here at the bottom of this wick at 244. So I've got a little bit left. I've kind of actually gone off piste a little bit. I've not mentioned it. I've actually just gone into Zcash. I'm not sure if that was the best move to do, and it might have just been my revenge trading some bad calls earlier on in the week. But I just put a little bit in there thinking it may get a bit of better growth. Whatever is in there, trust me, we'll end up going back into either BitTensor or Bitcoin. It was just trying to spread it, given that Zcash is down today. Felt like a good move to do. Anyway, we'll go through some of that a little bit later on. So we're talking about sentiment. We're talking about sort of what I spoke about on Saturday. I did it without any charts, without referring to Bitcoin's price as such, but this is crypto bubbles at the moment, and it's just on the monthly. So this is just in the last month, but you can see there's a smidge of green in there, and things like Monero and Zcash, they had all done well. They were, you know, in the sort of 200s%, but given how we have played the last couple of days, they have even come down themselves. But you can kind of see that generally we're talking about some serious drops. You know, 20% is kind of light. Most of the time we're coming close to the 50% level, and it has just been a bit of a bloodbath for us all. And that was the sentiment that I kind of got on Friday night, with people talking about wanting to sell up. And I did mention to a few people that, you know, the fact of the matter is we've been bleeding for so long. Yes, we may still continue to bleed, but perhaps wait until we see some sort of pump up, and then you can look to try and see whether or not you can get out. I don't know if those people took their advice, but obviously we went from 82,000 up to about 87. I'm not saying that's the end of the pump, but certainly would have been a better position for some people to have gotten out. But a point I was sort of trying to make was I've never really seen sentiment as low as it is. I mean, this November was supposed to be, you know, we had October and then Moonvember, hadn't we? And both of them have been pretty dismal. Not the worst November on record, still currently sitting at about 21%, but bear in mind, we're at 87,000. We were at 80,000, 80,500. So this was actually around about 26%, probably 27 the time that happened. As I say, we have seen worse, but generally they are only associated with the bear markets. Even 2021 at 7% down. Remember, the bear market peaked on the 8th of November, and then we saw that big collapse back down. So it was the start of the bear market, although we didn't know it at the time. So unusual that we should be seeing this in what we would think would be the, you know, Q4 of a blow off top and such a significant correction, for this to then recover on, maybe not in the right place. And this has got people spooked. As I say, other things that are getting people spooked, ETFs. You know, that's what we're hearing at the moment. You know, ETFs are not interested. They're hemorrhaging Bitcoin at the moment. The focus, like I do, has mainly been on BlackRock. And for BlackRock, Bijan posted this in Discord. But this is, not even just the largest sell-off in the month, or monthly sell-off, should I say, for BlackRock since the ETFs began. But it is hands down. BlackRock don't normally sell, as you can see on this chart here, which I'll blow up a little bit bigger. It's generally net positive, or it's just break even through there because, the bars are so big. The biggest sell-off prior to this was around about 250 million. We're at over 2 billion with still 5 days to go until the month ends. So a monstrous sell-off from investors there. What's this one for? Bitcoin ETFs bleed billions of dollars and post-record outflows. So, that was it. The overall ETF has dropped 3.7 billion in November. So, and that's not including October. That's just the November sort of losses there. And we can kind of see that we've had sort of some, back-to-back worst daily outflows on records, crossing 900 million on Thursday from last week. And the average ETF investor is actually now technically underwater. The average buying price since it started is alleged to be in and around $90,000. With us sitting at 86,000, the average investor is no longer seeing this wild ride from Bitcoin anymore. Actually, they are underwater. Now, whether or not that's going to lead to, them pulling out, or they're going to ride it for a little bit longer, we'll have to wait and see. I'm going to get onto the October the 10th manipulation thing. I kind of have a similar view to what you've just put there, KB6DD. But yeah, I'm going to come on to that one. Just bear with me on that. There was another ETF. Where was it? I thought I had the BlackRock iShares ETF open. I mean, let's not confuse ourselves here. They've still got like 770,000 Bitcoin. So a significant amount of Bitcoin in their back pocket there. So yes, that is down from 800 and odd thousand that they had, and they were over 100 billion at one stage, and now sitting around about 73 billion. But that is because of outflows and the fact that Bitcoin's price has lost 40,000. And this was the point I was trying to. Well, we'll get to that. Actually, I'm going to stick with sort of maybe just the negative sentiment side of things at the moment, and just from my point of view, the biggest thing that I've always sort of said I want to keep my eyes open for is just a loss of the 50 EMA on the weekly time frame. We have completely lost it at the moment. It's not just a small drop through it. It's currently sitting in and around 100,000. We're about $15,000 below the 50 EMA. And if you just have a look back, weekly time frame here, for the whole length of this bull run, we rarely lose it. And if we do lose and close below, it's not by far. It doesn't mean that I'm bailing straight away, as I've kind of stressed as many times as I possibly can. I kind of need to wait for a couple of candles just to really see where that sentiment is. And of course, the worst case scenario happened for me because it didn't hang around the 50 EMA. It absolutely decimated its way through. So my back is up. It absolutely is. My guard is up, and I am concerned because my major sort of red flag, do I really need to be checking my understanding of where the market is firing right now. As I said, I've not necessarily made that step, and I've kind of made that process, what I'm going to do, quite clear throughout. But I can't ignore where we currently are. Now, some people have said to me, why don't you check the 2-week? Because that's another good indicator. And I accept that the 2-week does give us a bit of a better picture. But it did fall through it because as we climb out of the bear market in 2022, 2023, it just takes longer because it's 2 weekly candles for these to recross themselves. But yeah, I can accept that. And I think people are pointing this out solely because it's looking very conveniently like it's resting on it. It hasn't really rested on it, in my opinion, throughout the rest of the bull market. So whilst I may have to just hold on to this for a bit of hopium, in all reality, I'm just going to stick with the weekly time frame. And many weeks ago, someone had asked me to use the bull market support band. I talked about it. I've kind of left it on this chart, but I never have it open. And if I just close some of these down and I do open it, I mean, the bull market support band has clearly lost its sort of level as well, which is more on the 21 and the 20 EMA and the SMA. So if that's a thing that you follow too, we have again quite significantly lost that. So this is just adding to that sentiment and that feeling from people that the market top has to be in. There's no big fanfare when the top happens. It's just something you know happens later on, and we're just sort of blindly walking forward thinking there's going to be some sort of recovery. And that's kind of led to, oh, sorry, I'll come back to that since I've started it. That's kind of led to where the fear and greed index finds itself. We have been in extreme fear now for, probably the best part of 3 weeks. We're at 20 at the moment. The lowest we've been is 10. And if you just have a look at the fear and greed index here, this is over the past year, because if you do it on the max, it's just hard to see. But if you can, we'll put it back on the edge. Just have a look at sort of like when we're down at this level. Let me just draw a line for you all. So when we, oops, why did I not draw? There we go. So I've just drawn that line roughly. Doesn't matter. But when we're roughly below that line, if it's in a bull market, we actually see that, yes, we have dropped down below it, but we recover relatively quickly. Bear markets, so sort of here and here and, well, no, sorry, not that one. That one there. It stays for a little bit longer, but 2021, we dropped down and this kept on zigzagging out. So we kind of did it. We had April of this year, the tariffs dropped in. But when we actually zoom in on the yearly now, let me just get rid of all of those. Let me just, how do I stop this? There we go. You can kind of just see the bit of the difference here. And apologies if you can't see it too clear. It's the best chart I kind of got. But we have, again, April's down here. Start of the tariff, dropped to 75,000, bang, straight to 10. And we did that. But as I said, we sort of recovered out of that relatively quickly. The problem that we've got at the moment is we've stayed down here. And as I said, that's something that you may normally associate with prolonged periods of fear, hence bear markets, rather than sharp pullbacks that we convince ourselves happen during every bull market. So, of course, it's only the fear and greed index, with altcoins getting absolutely obliterated and this focusing more on retail than on institutional investors. There's a huge argument to be said. You can't give it too much credence. But at the same time, we've spent over 2 weeks in extreme fear in what should be our bull market blow off top phase. And even if you go back to previous blow off tops, we've only just had the blow off top. You don't go from extreme greed down to extreme fear and then stay down there in times when the markets should be looking good. And this here is another way of looking at it, and it's kind of a ratio of bullish versus bearish commentary on social media. So this is, I don't know how they pulled the data, but this is taking big players in the crypto space, having a look at the data, the tweets that they're putting out across Twitter mainly. And we've got the lowest sentiment recorded in the last 2 years, since December the 11th. I can't even think what happened in December 11th, 2023. But so the sentiment really is as bad as we think it currently is. And it's not just crypto. We've got the traditional markets here, CNN Business having a look at the S&P 500, extreme fear. And we, again, have been in extreme fear for quite a considerable amount of time for the S&P. And it's interesting because Bob Lucas talks about it. So I sort of follow Bob solely because I've started to really get into the 4-year cycle, not the 4-year halving cycle, the 4-year cycle stuff with the likes of Bob and Camel and a few others. And whilst they're potentially saying we've still got one more leg up, although Bob's wavering a little bit, interesting what he's putting here is that stocks have bled for the past 4 weeks. The S&P is down 4.5%. That's all, 4.5% from its monumental climb for the last couple of years. And yet sentiment is absolutely in the toilet, which just seems like a really strange place for us to be in. Granted, there's some other factors in there with the US government shutdown. There were plenty of conflicts that have been going on, although some of those look to be resolving themselves right now. The data's not really coming out. There's concerns about entering into the recession. And hey, if you live in the UK, tomorrow it's going to be an interesting day for the markets with the autumn statement budget coming out. So definitely there, but it just doesn't seem right that actually for a relatively small pullback, and we'll have a look at the chart in a moment, the sentiment just seems completely off at the moment. He goes on to sort of talk about it was a very similar situation in the 2021 peak on the stock market. And I'm not necessarily here to go through cycle counts or anything like that, but you can kind of see the pullback that he's talking about here between 26 and 35. That is what he's saying we are currently going through at the moment. And that turned out to be one final push out there. So this is just a flush that is potentially coming up. But the sentiment itself seems very aggressive for quite a reduced pullback. Now, the NASDAQ has actually pulled back 9%. And I think it's because that tweet was a couple of days ago. And obviously, back in the last week, it did fall further. But we're on the weekly time frame here on the NASDAQ. You can kind of see all it's actually done is pull back to the 20 EMA. So it's not even an aggressive break of market structure or anything like that. It is a 9% pullback. But actually, you know, since 2023, I've had 1, 2, 3, 4 better or similar, or I say better in inverted commas, greater or similar market pullbacks. And with the exception of the April tariff pullback, most of them have sort of come back to that 20 EMA and then just sort of recovered it on. So NASDAQ has made a decent recovery sort of this week or today, I suppose, and yesterday, actually, what we're talking about. And so it's sort of, well, what am I doing? I don't know what I'm doing here. So that drop down now is only 5% or 4.5%. So maybe that's where he was doing it from. But the sentiment still remains in that extreme fear. I can't remember why I've ordered it this way. I'm not necessarily too sure, but we'll come back to sort of, oh, okay. So the one thing that I was trying to say to people on Friday night, and I suppose on Saturday in the talk, was there is an awful lot of negative sentiment out there. There's an awful lot of negative news. And even if this is the end of the bull run, if this is, and I'm not saying it is, I'm saying if it is, there will always be pullbacks on the way down. Just like there's pullbacks on the way up, there's going to be pullbacks on the way down. And we'll have a look at some charts and RSIs and all the stuff that's going to get us really excited about where, you know, sellers volume currently is. But the reality is there's been an inordinate amount of selling over the past 6 weeks. I mean, we went from 126,000 to 80,000 in the space of 45 days, losing 46,000. It's the biggest drop dollar-wise in Bitcoin's history. This month has been I think it was the 31,000 I got it at on Saturday morning. I'd have to go and have a look at the chart. It's probably 30,000 single monthly candle. Yes, it's recovered a bit, but it certainly has fallen. And we start to sort of have a look at, okay, well, what can we look at from a sentiment point of view to try and take it in the positive there? Yes, the market is as bad as it is, but the saying always goes, if there's blood in the street, buy, buy, buy. And there is blood in the street. There has been a significant amount of blood in the street. And we start to have a look at articles like this. I'm not necessarily going to go into it. I just want to sort of bring up this here. And, you know, we're talking about selling pressure. So what we've got here, Bitcoin's price in the light gray that you can't really see too well. We can see this inordinate amount of selling pressure during the tariff discussions, sort of how that sort of eased bottom and then came through. And we can actually see, you know, from the all-time high, we crossed this threshold and we go into sort of the high-risk selling pressure here. It absolutely peaked a couple of days ago, but we can see the selling pressure is dropping. It is cooling off now. Now, that doesn't mean it's an absolute bottom that we found, but the fact is the large amount of selling pressure that's happened, they've just had to take a step back. We can't have that much selling pressure for that long a period without some sort of relief to be found. And maybe this is the time that we're finding that relief. As I say, we're already sort of $6,000-$7,000 into the relief from this, which is, you know, nearly a 10% recovery for Bitcoin from its low from Friday, which again is no small feat. Sadly, we've just got a lot more 10% to get to before we see an all-time high again. And we need to just sort of take that with a pinch of salt of, okay, we're starting to reset. And my view has always been, I'll come back to that. My view has always kind of been that, okay, we've had that massive steep drop back down. It's what we do on the next climb back up. So the relief rally, if that's what it's going to be, part of a dead cat bounce, or the actual V-shaped reversal. And it's how the market deals with that upwards price trajectory is going to help me determine whether I need to act on this 50 EMA or if actually I can have that patience and buy back through. And yes, ideally, I'd like it to get to above 100K, but when we go on to the actual charts a little bit later on, we'll try and dig into maybe some more realistic levels we can kind of have a look at to just see whether or not we're fulfilling some of those milestones on the way back up. One thing that was mentioned on the weekend, I talked about it on Tuesday. I don't think I talked about it very well, so I'm just going to very quickly cover it again. The def crosses occurred. And what we were saying is actually in bull runs, when you see def crosses, it normally signifies we're close to a market bottom in terms of sell-off. So the def cross, 50 and the 200 EMA, daily time frame, as you can see here. And all I've done is I've just gone back to every time that it's crossed. So every time you see a red cross, that's when a def cross happened. And then the ticks, or whenever the price has then gone up from whatever level it was at when the def cross occurred within 2 months of that happening. And you can kind of see this one's a bit of a cheat because it did go up, but then it continued on the way back down during 2022's bear market. But technically, it met my criteria, which was a completely made up criteria, but it was anyway. So we've had 1, 2, 3, 4, 5, 6, so the last 7 in a row have all managed to do that. I shouldn't have done that because this one hasn't counted. So the last 6 in a row. Let's get rid of this one. That doesn't deserve a tick yet. Then we didn't coming into this would have been off the okay. I think you probably could have ticked that, but I think it fell down. The 2 months was actually down here, but probably could have been a tick. Anyway, we'll give it as a net and not a tick as we came out of the May 19 high, but unfortunately into the COVID crash after that. Then again in 2017, which is a prime example of maybe what we're experiencing, you know, big drops down, but we will recover. We'll have some sort of relief, and then it's how we interact here. We can't see that def cross. It did go slightly higher, but then it fell away into a bear market. And then, yeah, the other one's there. Long story short, it isn't correct now. This should actually be 9 because I counted the first one. So of the 11 previous, 9, we saw that actually the price was higher within 2 months, and only 2 of them. So the odds are in our favor that actually the def cross should be signaling that we're getting towards the end of the end of the selling. We should see some form of relief rally, if not a recovery, over the next 2 months. Now, sadly, that 2 months is actually going to take us into January of next year because the def cross occurred on Friday, the 14th of November, according to this. And with that being the case, we'll be looking at middle of Jan for when that 2 month period is over. But it was there nonetheless. And then some of the other things that, you know, we've been seeing about sort of sentiment and where things are, and perhaps actually we've just had such a seller's market over the last 6 weeks that we're just getting that exhaustion, is the Bitcoin Sharp ratio, which I'll blow it up on the screen here. So what we're kind of, or what they're alluding to in the article here, the what's the word I'm looking for? The gray line going across this. So you got the black line, hopefully it looks black on your screen, of Bitcoin's price, and then we've got this sort of like colored line, and depending on how deep it goes, so what color it changes. If it's just meandering around, it's kind of yellow in no man's land. If it's overheated, it goes red, and then if it gets down to the bottom and cools off, it's green, or it's really cooled off and it's blue. And the point being that actually getting down to the levels that we're seeing at the moment is historically where we'd see with exhaustion in the market, and we're going to actually see a pullback and some sort of recovery. I suppose I buy into it if you add the caveat of bull markets only, because it did actually do this in 2022, but as we can see, it continues to go back down. It's no sign that it's an immediate turnaround. And I suppose you can take it as a bullish, you can take it as sort of maybe an indication that we might have that turnaround. But I also feel that there's just quite a bit of hopium looking into that. And it's the same with plenty of other, unfortunately, things that have been put out on Twitter or YouTube. And I'm sure people are probably saying about what I'm talking about now. But some of them, they're curve fitting to try and get it to make you feel a little bit better about yourself, just because we are in the position that we unfortunately find ourselves. Don't know what that one was. Let's close that. And what's this one? Okay, I'll come back to that one. So, yeah, let's just have a chart up in the background whilst we're talking about this. We'll have this one up. Yes, this has been a brutalish correction on the way back down. And we can now have a look at how far it was. It was a 36% correction, the largest correction of this bull run. And as I said, 45 days for it to have achieved that. And if you want to just take it down onto the last 4 weeks, top to bottom, is 36,000 drop. Actually, it's 5 weeks technically because this candle's here, but it was at the time $36,000 drop. Not technically a monthly candle because one of those weeks were in October, but if you just done it from 4 weeks, it'd been a month, and nearly 31%. And that is why we find sentiment where it is. And I probably still stand by what I said on Friday night. Those gentlemen are asking, but also on Saturday. I can't guarantee where the future of this is going to go, but I would expect a pullback. That's that. I know that might be a cop out, but everything I've seen has just suggested whether you just go back at previous end of bear markets or you just go back to market recoveries, sharp drops like this will find some sort of pullback. The question is, how far do we go? And even on the weekly chart, if we're lucky, we'll come back to here, roughly the 50 EMA. However many weeks it takes, there is going to drop down, and this has started to curve down. Currently sitting at 100,000. The battleground, not only from a psychological point of view, but just that 50 EMA getting back above it at 100,000 is going to be a huge one. We get above that, we can start having that conversation about, okay, V-shaped reversal. But if we just meander sort of up to it and then we come back down, and especially, I'm afraid to say, if we come up to here and then we come back and we lose, I mean, even where this candle closed at 86, but let's just say 80,000, then I think we've really got to be saying to ourselves that we're not right. We're not in that bull market anymore, because then we're suddenly on a major time frame in a genuine downtrend of making lower highs and lower lows, and the conversation has to change. And we have to seriously consider accepting that as the way it goes. So it's kind of a bit of a be patient. You know, we've been through the worst of the sentiment. We can see on the fear and greed index that we're starting to climb out of that. And for those of you that are able to hold on to your portfolios through this drop and not look at the drop itself, well done to you. For those of you that managed to make a bit of money by sidestepping, well done to you as well. But let's just see where this one ultimately goes. I want to talk about a couple of things. One, someone asked me about MicroStrategy and whether or not something that was discussed about MicroStrategy caused the drop on the 10th. And then, as KB6DD alluded to, or whether it was a bit of insider manipulation on a rather large exchange that has actually gone and caused the October 10th drop to occur. So I'll try and cover those quickly if I can. So I think it's Carolina who asked me about what is going on with MicroStrategy. So let me just have a quick drink. Effectively, the fact that MicroStrategy is on the stock market, because it is, or strategy as it's called, it is it was an IT company, I suppose. It just so happens to have shifted a focus to being this digital treasury as such, and that digital treasury being Bitcoin. But that's only been the case since 2020, maybe even 2021, that Michael Saylor really got into that. That being said, the MSCI index is looking to kick out or exclude companies that, their general sole purpose is just a digital asset treasury. And it's not just strategy. Let's not kid ourselves here. It's a fairly decent list of those. Now, why are people putting two and two together and making fish? Well, a couple. Because firstly, this meeting was held in and around the 10th of October, which just so happened to ultimately be the same day, but it wasn't made public on the 10th of October. And whilst you could argue that Strategy's price has been on a decline for most of the year, it wasn't really on anyone's radar to suggest that this was going to cause it. And I go back to, even if it was, why would it affect the entire traditional market? Why would it affect the NASDAQ? Why would it affect the S&P and gold and everything else? We're only talking about one large cap company. Sorry, I'll come back then. Sorry, I got sidetracked by something in chat, but I'll come back to that in a second. I'll just finish this. And good old Michael's had to sort of come out and sort of defend this, I suppose. And it has been quite a lot of FUD with Michael Saylor and strategy at the moment, which again, typical they're one of the biggest company that actually hold it 650,000 Bitcoin in their back pocket. But the response to the index matter, Strategy is not a fund, not a trust, and not a holding company. They're a publicly traded operating company with $500 million worth of software business and a unique treasury strategy. A unique treasury strategy is just buy as much Bitcoin as they can. So he goes on to talk about the public offerings that they've done, talks about the trusts that they hold as assets and everything else. And he believes that argument will be enough for them to sustain staying on there. And it won't be a problem at all. And don't forget that the decision itself isn't actually made until January. Now, funnily enough, who is, I mean, Peter Schiff's there, but the person that's actually coming out with this the loudest is JP Morgan at the moment. And for any of you that have been in crypto long enough, JP Morgan, they're a little bit like a Kramer in a sense. Not that they always get the wrong side, but they're constantly flip-flopping their minds about Bitcoin. And they happen to be shorting Strategy at the moment, and they've probably got a short position on Bitcoin as well. And they are shouting the loudest about the fact that Strategy shouldn't be on there, and it's going to cause billions of dollars worth of outflow of Bitcoin just because they will have to sell some of the Bitcoin. I would just say it's very convenient that JP Morgan 6 months ago liked Bitcoin, now no longer do, of making this a bit of a meal whilst we've seen an all-time high and prices are falling away, when you would probably argue that market makers are taking profits and likes of the big boys are doing that, and they need to sell so they can start filling their buy positions for the way back up. We talk about that all the time. So a little bit convenient there. And even since that's coming out, Saylor's been buying. He continues to buy. So he bought another, I think it was like 800 and something Bitcoin recently. And then somewhere in this article, I can't remember where it is, he goes on to say that, look, back in the depths of 2022, when, Bitcoin's price was down at $15,000, their average entry was 30,000. They still managed to maintain there. So the fact that, their average entry, I think at the moment is about 64,000, might be a little bit higher, so you have to forgive me. But they have got the runway. I read somewhere it's a 70-year runway they've got to survive. So I don't think that's necessarily too much to go in about. Then to just go on to the other comment that was made about potentially Binance. I believe it's Binance. I'm fairly certain it's widely known as Binance, having a stable coin on there that depegged down to 65 cents, which effectively caused a significant amount of auto deleveraging of not just retail, but of the market makers. And the market makers should be untouchable on these exchanges. But such a drop actually managed to liquidate them. And I'm not here to say whether or not that has happened. I actually started a few weeks ago pulling together this Binance versus Wintermute sort of like lawsuit that came all about from the 10th of October. And I maybe one day I'll actually dive into it. I probably the moment's past now, but I did really think that there was something there, particularly with Wintermute, probably the largest market maker in the market now. That God, what was the FTX one called? Can't remember now. Anyway, whoever Sam Bankman-Fried's girlfriend company was, I can't remember off the top of my head. But since they've fallen away, I'm going to shout it in the middle of my sleep tonight when I remember. These guys are kind of filled in, and they did lose a significant amount of money. But there was when I started diving into it, there was Alameda Research. Thank you very much. There were other things there because there's been a significant amount of Wintermute selling of Bitcoin via Binance. There's been sort of a lot of exchanges, sort of like the average kind of like Binance sales and buys kind of average each other out, and then Binance is just massively down. A lot of suspected activity there. But I go back to the same response, and this is just my opinion without really too much thought about it. My issue is, let's just say it's true. Let's just say that Binance did flick a switch deliberately, and that one of the altcoins, I don't even know which one, happened to drop depeg to 65 cents, which, trust me, is a massive issue for a stablecoin to do that. Cascading auto deleveraging. Why did that affect the NASDAQ? Why? I can see it bringing down the crypto market, but why did it bring the other markets down? And so I don't know whether we're just looking for reasons for that to happen. And I don't know the inner workings of Binance, and that, you know, they're denying it, saying, "Oh no, you know, it's just a glitch or whatever." And we tried to stop it as quickly as possible, which then made things worse because they froze everybody's assets, couldn't sell anything, and all of that. And they have said they're going to try and do some repayments. So I always just think, for me, that's a very isolated crypto issue, and yet somehow had the power to bring down the altcoin, the traditional markets. I'm not sure. I accept that I don't know the full picture of that yet, and I'll happily be educated on it. But for me, it just feels like that's just a convenient story to have, just create even more FUD in the market, scare everyone else, when actually it was just a market move. So anyway, that's just my thought on those. Right. Whew. Let's have a look at Bitcoin's price. I'll try and then tackle a couple more questions, but they're mainly charting related, and then we'll go from there. So good old classic. Let's just get rid of some of these because they've already burnt through them and we knew about that. So yep, there we go. I need to fill in those holes there, but we can see. Let's have a look at the yellow box at the moment. This is the reason I did a short on Friday, or a sidestep, if you will. And then, trust me, it was a bit of an undertaking because I had to get all the trezors out and everything else. But I sort of woke up really early Friday morning, 86,000. I just felt like they were coming after this liquidity here. And I didn't expect it to happen in the same day, but it did, thankful for me. So I just put my buy order in at 81,200, I think it was. And it ended up getting filled. Because look, it just comes smashing straight down into this. And then it's bounced back up. And I swear to you, on everything I hold holy, I have not moved these fib levels. But just look at where it decided to come into rest. Bang on that fib level. We've had a nice steady bounce back through this other fib level, sort of 87,000. Coming back to retest it. But, you know, strong move off here. Bounce back, great. Build ourselves up maybe for that next one up to 94K. There are a few other things in the way, but just from a fib point of view, I think there's an ideal argument to be had there. We've got a bit of work to do on these 12-hour candles to make sure that we stay above there. And if we can start doing that, there is really a conversation about, when you zoom out, is this actually looking like a V-shaped reversal? Because that's a very strong move up. And I'll reiterate something I said on Saturday. You know, everyone gets excited when we have a massive spike up over a very short period of time, and then I go and douse that with, we can have just as big a correction in just a shorter period. Nobody likes me saying that, but let me try and take a positive spin now. This was a cascading collapse of price over a matter of about a week. Why can't we have it recover in exactly the same amount of time? There's no reason why we necessarily can't. Obviously, we need some stimulus to do that. We're going to need volume. We're going to need buyers to step back in. And we'll do this live whilst I'm doing it, because I didn't do it before. But if we just get COILING up, we go to derivatives, the heat map. Let's have a look on the monthly to start off with. Sorry for blinding you all. This should actually be in dark mode, but it ain't. And it's loading. Come on. Right, well, whilst it's having a think there, I was hoping that we can see where it is. But it cleanly just took out that previous box down there, and it's recovered up. And I just want to now see what has been built here. I mean, maybe you'd have one sort of there and probably one some level here that we've gone into and been rejected from. Okay, here we go. Let's have a look. So, what am I on candle lengthwise here? Every 2 hour candles. So we had one at 88 and we got one at 89. Not really that big. Let me just take it out to the 3 month. Sorry. Trying to find a clear block so we can kind of have a look. Of course, it's going to take forever again to reload on this one. Okay. Got that shadow there. Sweet. This is why I do it before I start the call. We'll come back. But I would be thinking that we've probably eaten into one here, and that's why we've rejected through, and then we may start to see one building, as I say, certainly above 94,000, if not 95 kind of level. So yeah, so we have been eating into this one up to 89, goes all the way up to about 91, and then we've got, okay, 94. It kind of is just pretty steady through. There's a little gap there, but 94 to about 96. So, okay, not too bad a guess from where they are, just from looking at price action. But they're still not that thick yet. And granted, they've not had much time. It's not like they're deep yellow. But it's probably just relative. But you just see, I can't really see anything lower now, annoyingly. So I'm kind of stumped. I'll probably try and find a new one off that. There was another chart I wanted to show. Oh, okay. One of the things people I kept on getting asked on Saturday night, so in the bar, was my thoughts on, because again, it's sentiment. People are wondering whether or not the market has topped. And it was this Bitcoin bull market peak indicators. Now, I did a talk at a cuddle 12 months ago. We didn't have all of these, had some different ones, but this website just kind of conveniently put it all together. And, 12 months ago, I was going off this and just suggesting that this is a good way of just seeing whether or not we market topped. And a lot of people saying, well, none of these are fired. So why is anybody concerned that the market top is in? And I actually, I didn't really have an argument for it on Saturday night, except for maybe this time is different, which is never the best argument to have. I completely accept. This time is different. But when I was trolling through Twitter, good old Tony the Bull, I kind of thought, maybe this is, I'm not going to make us watch the video, but he kind of sort of summarized it again a bit here, is why have we not fired the Pi cycle, the MVRV, Pure, 2-year MA? And he goes on to say, the bull market matures, momentum, participation, enthusiasm, it weakens over time. And so this on-chain data maybe becomes less and less reliable. Now, the Pi cycle's actually only had one real live iteration of this. So maybe it's not there. And it's true, like none of these are anywhere near firing. I'm not going to bother loading them up. You can kind of see them by the progress bar. None of them are that close. Long-term holder supply is about the closest, and short-term holder supply percentage, but they never drop too much anyway. But not a single one has actually activated. One hit 0 of 30. And the only one I've seen hit in the last 12 months has been the alt season one, because for one time we were above 75. And it just makes me think that actually maybe we just rely on these too much, but we have a matured market. And let's face it, we have got, a significant player in the market of institutional investors that have bought up so much Bitcoin over the space of the last sort of 2 years that it's kind of skewered a lot of the on-chain data, because there's been some significantly aggressive selling with Grayscale initially, some even more aggressive buying over the same period as all the ETFs just bought up what Grayscale were trying to sell, and then a very long sustained period of ETS purchasing, which has probably just sort of pushed everything out a little bit from where it is. So I'm not saying that these have to just be ignored from now on. Of course they don't. But if we start to see that this really doesn't actually move the needle that often, and these start to lag behind, don't be afraid of just being like, okay, it's not quite there. And some of these we went through on Tuesday. Some of these charts are still suggesting sort of $400,000 Bitcoin before the peak, and putting that peak well into 2027 now. So, if we got the 5-year ISM cycle, maybe that could be the case. But right now, that's not where I personally am sitting. So I'm not sure if that answers that, but hopefully it does. Going on to, I've just got on the other screen the Avenger stuff questions up. So I'm just having a look to see what questions are asked of me. So MicroStrategy, we've talked about. Someone wants me to have a look at Casper, which I'll do. Someone else wants me to look at Casper. In fact, Casper's very popular. Okay, so it's just a Casper chart. Fine. Okay, let's do some charting with where we currently find ourselves. Bitcoin then. So for the eagle-eyed of you, I've just changed the color to a green of this 800 EMA. But this is a daily time frame, and this is Bitcoin on it. And obviously we can see the rate of which this has happened. Very few green days, if you will, just a lot of red days. And interestingly, Thursday, Friday last week, some significant red volume. And just look where it came crashing down into. The 800 EMA actually, taking out that liquidity block as well. Yeah, we broke below it, but a good strong bounce from that. But I think the problem for me on the daily time frame is we haven't broken anything else yet. This is, it's a 10%, probably more bounce from the bottom to top. It is almost an 11% recovery. But all we're doing is smashing straight back into the 10 EMA at the moment. And to be honest with you, the 10 EMA has pretty much ruled the roost for the last month, since October, end of October. Yeah, okay, we've lost it to the 20 every twice, but back then the 10 and the 20 weren't that far away from each other. So there's a real battleground at 90k, and then the next one after that's 94. And unfortunately, you know, because this was such a vertical drop, there's no shoulders for us to really say, oh, we can build off from that one and move up. There will be on lower time frames, but it makes sense that, you know, after losing our last EMA on the 11th of November, we've come all the way back down to correct that. There's other reasons why that level was important, and we're finding that bounce from it. Nearly my water over on my PC, but we haven't yet managed to prove ourselves. And that climb back up, you know, we kind of need to, if we're just looking at candles, we kind of need to make a new high here at 106. When you say that and you think, wow, what have we got in our way? You know, the 10 at 90, 94's got the 20, the 50's at 100, which we know is also the weekly 50 EMA. And then we've got the 200 at 106. And if we get all of those, then we'll have reversed this down here. So there's definitely a lot of work. And when you're in that extreme fear kind of market, it does feel kind of unbelievable, unachievable that we're actually going to make it. But I do stand by, just because we came down quickly, it doesn't mean we can't come back up quickly there. Let's get rid of that. I don't know if we can call that a bottom, but let's just throw it on. Let's just assume that that was, I mean, what do we do? We'll do wick to wick, eh? We'll just see what that does. In terms of, is there any other levels that we can kind of tie in to this? I mean, obviously that 89, 90 level ties in there, but the one I'm actually looking at is probably this one, 101. Just going to tie in with the 50 EMA, ties in with the bottom of this angle down here, and it also ties in with the 50 weekly EMA as well. So there's quite a lot in and around that sort of 100,000, 101,000 I wanted to be looking at. And I suppose, going back to my initial thing, well, we should see some sort of recovery, whether or not it's a dead cat bounce. Maybe that's the level. We get to here. And it's a journey to get to there, I accept. We get to there and we lose it. And maybe I need to have a question with myself. But we get to there and we can get above it, or we can hang it, you know, stay in the game for a little bit before moving up. Then you know, maybe that's to be had there. And that's, again, assuming that this is the bottom, which I accept it may not be in this instance. Let's drop it down to lower time frame. Let's get rid of this here. Okay, so I mean, let's have a look. If this is the top, sort of 1, 2, 3 down. So we're potentially a drop 3. So I can get rid of it now. We'll just write D3 here. And if that's the case, some sort of maybe another pullback, and then we can climb back out of it. Maybe that's something we can have a look at. But in terms of the actual EMAs and vectors here, obviously we've come running nicely up to that 50 EMA. We have rejected from that. I don't necessarily have a problem. You know what I like to look for with the 50 EMA break? Is it with vectors? We come back down, but the 10 and the 20 are holding us pretty well at the moment. What we want to see is volume, green candle, I'll take a blue even, through here, but also just to add a little bit of magnetism to it. We've got these 2 red vector candles from Thursday, Friday that can maybe help drive that price ultimately through there. And then it's just a case of building above that 90k level and looking to go through. But I mean, if we were to go down, I'm not going to bother wasting your time. If we were to go down lower time frames here, you know, we are at least starting to find some sort of support kind of along here, which we're just snaking up. We've just got to make sure that we just don't lose that. And it really is just whether or not we're getting squeezed between this. And again, it's that volume that we need. Now, maybe that needs a bit of fundamental news or some wider news there. I mean, we don't have any economic data really coming out, except for the budget tomorrow in the UK. But I don't think that's going to have the power to move Bitcoin's price, nor do I see it being particularly positive for Bitcoin. So, yeah, I think that's the battleground. But I kind of like the setup at the moment. As I say, you know, from the low back to the 50 EMA, a rejection, but not an aggressive rejection from. They're just naturally floating back down here. And then can we just get charged up here? Green vector through it. Take out these vector zones here, maybe start to build something, and then we can go from there. And then it's back into the case of, well, we've got a 200 EMA, which is 98. By the time we get into it, it's probably going to be 97. And then we start to talk back to some of those levels we were on the daily time frame. So, okay, back to the daily, and then let's have a look at BitTensor. No, I got rid of Gandalf and the Gandalf line. The Gandalf line, pretty much where the 800 EMA is at the moment. And this is kind of looking a little bit similar to Bitcoin instead of kind of what's awaiting us. Except for we don't have any EMAs below us. So we've dropped down. We had a good day yesterday. Or it might be Sunday. Sort of recovering out of that low. We got down to about 260, didn't we? And then, since then, we've sort of almost done a 15% recovery back to where we are. But again, it's a 10 EMA, round about that 300 level. Okay, it's at 308. It's not the Gandalf level at 315. But there's a battleground to be had there. And this 10 EMA really has just ruled the roost here. So, no guarantee that we make a clean break from this. And daily candles, certainly with BitTensor, not often with volume, very little volume even on the way back down. So there's no vectors anywhere near us. I mean, the closest is actually down at 230. Let's not even worry about that right now. But if we do get rejected from that 307 level, then I'm going to question whether or not that 240 level that I was having, which was effectively the bottom of this drop down here, which was on the 10th of October, may then get retargeted. That being said, can we break through that one? And then there's just a lot of battlegrounds for us. But back to 360 was a really important level for us. And when we go on the lower time frames, you're going to kind of see it as well. But making that move up to there, we don't necessarily have to get back to the 50 EMA. It's not been that long since we last hit it on the daily time frame, so we can still spend quite a bit of time away from it. Unfortunately, 4-hour time frame, so a little bit better than where Bitcoin is, because we've made a bottom, we've come back up, we've retested the 50 EMA a couple of times, and we're having that battle right now. We've got 3 hours left on this candle, a little bit more volume on that candle, get it green and above this. And then, naturally, we'll probably have some sort of retest there. We'll have a go. But if we don't, I just wonder if we're going to end up running out of steam, and then just coming and correcting, unfortunately, back down. Where's my trend line? Kind of similar to Bitcoin. I can't quite draw it from the base like I did with Bitcoins, but it's working its way up this. We just, okay, can afford another move back down to sort of 290, low 290s, get back to the 10 and the 20 EMA, and then kick it up. Don't know why I slapped then. Apologies if I deafened you listening on your earphones. But yeah, and then a move back up. And you can kind of see that sort of 360 level we're talking about. There is some vectors here that could take us up. There's not much in the way of holding us back. There is a bit of noise here, I suppose. Noise here, sort of 320 to 340. But getting through that, I can see us getting back to that 360 level. And then it's a case of just building up from those, making newer highs as we get back through. I'll be real with you. Except for that sort of 3-week period in October, it was a pretty painful time for BitTensor, price wise. So nothing's guaranteed, obviously. But if we were just to ignore what we saw there, Bitcoin's price, we had that move up. This is like really nasty kind of TA, but generally, if we take out that 3-week period, we're kind of on track to where we would be if we were just continuing our move down that we've had over the few weeks. I'm not sure what logic I would have with talking about that, but I think you kind of get the sentiment that we have been in a downtrend for quite a long time. It was nice for us to break it, but the fact that we then immediately lost it and then made a new low, closed low on the daily time frame, it just doesn't feel great. And again, it may just be a case of, don't know why those coming back, may just be a case of, if we do get up here, we start thinking about being traders more. And if we lose that level, start thinking about, can we sidestep? Can we take a better position later on instead of watching it go all the way back down? Certainly how I'm going to try and play those things going forward. I think I've just forgot to sidestep over the last 2 months, and also it didn't necessarily cost me. I just think there was an opportunity lost there. Let's have a look at some of the move. SPX is green today. Oh, well, Casper. Sorry, let's go on to Casper, because Casper has had a good move I'm not sure where. Maybe people still hold Casper in the community. I'm not. Why is that happening to me? Come on. Not necessarily too sure, but it has had, it made its bottom at 3.5 cents, which is particularly low, and it has had a rather, shocking fall off like everything else has had. So we expect to find some sort of bounce. I think the good thing is got through that 10, that 20 EMA with green vector candles. But look, you don't have to have 20/20 vision. It's just run straight into the 50 EMA, and that's what it's rejected off. So absolutely fine. Don't expect it to get through, but it's got to make another effort for it. Otherwise, it's just a retest of the 50 EMA, which it hadn't had since mid-September, so the last 2 months. And then do we continue on the way back down? Look, I can accept a pullback, but we start going back into the low 4 cents, and you've got to kind of question, is it just a pullback and then a continuation up, or actually was this just another continuation of the downtrend as an overall? But yeah, you can't fault the move. For any of you that's still in it, you've seen at least a good return there. I'd probably argue if you're in it now, you've probably been in it for quite some time. So whether or not it's as beneficial for you, I'm not too sure. I will do the 4 hour. Look, there we go. You see, this is what we need Bitcoin to do. And Tau. Breaking that 50 EMA with a vector candle, making its move back up to what would then be BitTensors and Bitcoin's 50 EMAs, and then we can have another discussion. But that's what we want to see. So Casper doing what we need it to do. As I say, having that battle with a 50 EMA and the 10 and the 20, and then it just finds that move up. And it's actually, to be fair to it, on the 4 hour, also got above the 200 EMA with a bit of noise here to potentially eat in towards. So, okay, 4 hour has shown some good movement. Someone asked me to have a look at the Tau BitTensor chart, and I got to be honest, I'm not sure what the need to keep looking at the Tau BitTensor chart is, unless you're trying to still do the flip-flops. The community's kind of moved on from it, so we have seen that move. But just look, over the last, I don't know, what's this, 2 weeks, it was at 10,000, and now Casper's strength has pretty much half that. So, had you have made an advantage of that move there, there's an argument to be had that there's some sort of head and shoulder there, I suppose. Maybe this plays out and Casper continues to dominate against Tau, and you get that move into that vector zone there. But it's not something I'm following because I never really did the Tau Casper play, and I was never a fan of Casper anyway, so I'm just rather looking at the Tau stuff. So apologies if I don't go into too much depth on it, but that's just kind of all I really see from it. Ethereum. So Ethereum has had that move down. It's unlike, remember, Bitcoin, let's get rid of those, came down to the 800 EMA, tested it, bounced from it. Ethereum just doesn't look much better. It lost it. It's come back up, and it's having that battle with that and the 10 now. Now, technically, it's ever so slightly above it, but still a bit of work for it to do there. So still not looking in the best position. The 200 and the 50, we're getting that death cross now on the Ethereum chart. Everything's kind of moving back down. So maybe we are seeing a bottom if the same logic applies for Bitcoin, does for Ethereum. But it just seems a lot weaker for me. We're back in the 2000s now. Well, so that psychological loss of 3,000 is big. Where do we come back down to? All that noise down there. And I think we can draw a fib on this one. I think we've probably done this in the past. So the fib came down to the 0.5. It's kind of just having that little bounce there, but we can see there's some logic with, I suppose, the noise in and around here and sort of where that bounce is. But for me, I mean, we either go to 3,600, 3,500 level, or we come back down to the low 2000s. I mean, that is sadly the two options, aren't they? We either try and have another battle, the 250 EMA, or we get rejected here and we come and test the base of that price action, 2,400. So yeah, and bearing in mind, biggest altcoin out there, it's going to have an impact on where some of the things are. Let's have a look at some of the others. The VIX has had some moves up. It almost got to 30. When it's high, you buy, but it has sort of come back down now. Dixie having a real battle with that 100, but just recharging itself again, maybe for another move up. NASDAQ has gone green now today. It has started to move back up. Daily time frame at the moment, back above the 50 EMA as well. You know, just again, just a pullback starting to recover. It's just odd that Bitcoin and cryptocurrency hasn't really seen that move from risk on assets like that has. Again, S&P just a little bit ahead of this, but just look how close both of them are to all-time high. I mean, this is only 200 points away from all-time high. So why we're still sitting in extreme fear, I'll never know, but we are. Some of the other ones, I mean, for those when we're talking about strategy, yeah, this is, I mean, you go back to, it started the year in and around 325. It's almost lost 50% this year. It had a high this year of 460. And I did speak to someone on the cuddle, I can't remember who it was, apologies, about my thoughts on MicroStrategy as an investment. I've never had the courage maybe to invest in it, or the inclination certainly. One, because we're smart enough to do Bitcoin ourselves. Two, I've only just taken control of my SIPs and I've just moved into other things in terms of exposure. I want to wait for a better Bitcoin exposure than MicroStrategy. Three, I just don't understand what the excitement is in investing in that company. The treasury asset side of things, you know, and sort of the dividends, or the constant forever infinite money glitch with share buybacks and dilution and everything else. It just doesn't seem that appealing to me. And people like to make a lot of similarities with, you know, MicroStrategy maybe sort of peaking before the markets do. And there's definitely a lot to be said about that. But MicroStrategy just gets a lot of FUD regardless. But you can kind of see on the daily time frame, we've lost some significant levels, and we've really lost the 800 EMA. I mean, for me, I can't see why we're not going to end up going down into this noise. And I've just taken the average in the middle of 340. Sorry, 140. So yeah, Circle down at 60, back up to 70 is kind of where it's sitting at the moment. Towex had a decent move up today. I know the market's closed now, but it didn't seem too bad. Oblong, I don't really follow. It still seems to be falling away, unfortunately. I know that people talk about there's some deployment and stuff to be had, but we're in a bit of a downtrend. You know, when we get to these bottoms, we do kind of see some sort of move back up, but I think probably only to the 50 EMA seems to be and even if we did get above it to the 200 EMA. I'm just looking at the time. It's already 9:10. I've probably been rattling on with you guys for far too long. So I think I will end it there. I know, Anita, you've put, when do you have any idea for the next cuddles? I don't. If they're not on the website, I don't know what the dates are going to be, I'm afraid. Best person to ask is either Lewis, he's probably actually the best person to ask, or on the Trading Pub on Thursday, which I assume is going to go ahead 1 p.m. as they usually do. Other than that, you know, for me, sentiment is bad. Of course it is. It can't stay, even if it's going to continue down, we should see some sort of rally. And for me, it's how we react on that rally, which is what I'm going to do. Still looking at the 50 EMA on the weekly time frame. But as I've said, my back is up because we have lost it. Other than that, hope everyone's doing good. Hope everyone is, you know, trading and feeling comfortable with whatever their plans may be, exit or not. If you have any questions about what I talked about here, or any follow-ups from what we talked about at the cuddle, or anything else, please feel free to DM, tag me, whatever it needs to be. Of course, I will let you know with my moves in terms of the Zcash, because I bought spot that, as I said. I just want to see how that plays. It's been moving quite well, and if it doesn't move as well as BitTensor, I'll take that risk and I'll just take the L and move it across into BitTensor afterwards. But I'm just going to see how the whole market kind of runs with things on that one. Enjoy the rest of your evening, everyone, and I'll speak to you all soon. Cheers now.